Our Duke Energy trade, tracking smart money through unusual options, expires today, April 17th, with over 200% profit. That means this wealthy investor made a $100 million profit on that $50 million trade we were following. And so this is another real-time example showing just how profitable this strategy can be. So in this video, we will briefly go over our trade so that you can see exactly how we did it. If you've been following our channel, remember this trade started back on January 29th when we detected unusual option activity and entered our trade when the stock was at around $111 per share. And so this was the video analysis we shared on our channel in which we analyzed an unusual trade worth $50 million and concluded the stock was a buy. And clearly this analysis was correct because Duke Energy stock went up and is currently trading higher at around $123 per share. And so if you want to see how we analyzed the data back then, we'll put a link to this video at the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. Now, why is our trade so profitable and how much did we make exactly? Well, if we traded this stock ever since our analysis, you can see that it's gained about 10%. But since we traded options, we had the leverage to gain more. And so, as you can see here on the option chain, this is our options trade, the April 17 options, which expires today at the 115 strike calls. You can see our trade position here. POS stands for our position, and the green color means a buy position. These options are very deep in the money now, and you can see how much they are currently worth. We could sell them back to the market between the bid price of $8.20 to the ask price of $8.50. Keep in mind that options are priced per share, so we need to multiply by 100 to get dollar amounts because each options contract represents 100 shares of stock. And so after multiplying by 100, each contract of these call options costs between $820 to $850. And if you look back at our video analysis when we entered this trade, these April 17 options at the 115 strike calls were only going for a price of $250 per contract. And that is why our trade turned out so profitable. According to this profit loss graph, which already factors in the $250 cost of the trade, we now have a profit of about $583 per contract. And so to calculate the profit percentage, we divide by the $250 initial cost and then multiply by 100 for a percentage, and we get a total return of 233% profit. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, that help them make smarter financial decisions. It's no secret that the rich get richer when they trade based on insights that most people don't have access to. And so, if you want to get access to more of these deep insights from the rich, then go to our website. We'll put a link to our website up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, it is worth pointing out that this successful trade in Duke Energy stock also highlights the importance of a key investment principle, which is portfolio diversification. While some unusual trades may be losses, substantial winners like Duke Energy can make a significant positive impact on our overall net profitability, balancing out other investments and enhancing our financial growth. For example, just one of these 233% profit winning trades can offset more losing trades. We could lose 2 trades in a row at 100% loss each, totaling a 200% loss and still be up positive by a 33% gain. Now, if you've been following our channel, you know that we do not lose that many times in a row. More like the opposite, because we win a lot more trades. But the point is, even though many people focus on the win-loss ratio, or how many winning trades versus losing trades, the real key lies in how much you can gain when you do win. A high win rate does not necessarily translate into higher overall profits if each winning trade yields only a small return. Instead, focusing on maximizing gains in winning trades can have a more significant impact on your bottom line, even if you have occasional losses. And that is why, instead of trading stocks, we primarily trade option strategies with a better risk to reward ratio to maximize profits and reduce losses by diversifying our portfolio with more of these unusual trades made by wealthy investors. Speaking of the rich, whoever traded $50 million on these same call options that we analyzed initially to enter this trade has now made over $100 million in profits because of the 233% return. This is exactly how the rich keep getting richer. And that's why we track and analyze their trades, so we can take advantage of the same opportunities as the rich. If you want to see exactly how we uncovered their trade on Duke Energy, we'll put a link to our analysis from this day back on January 29th, right over here. And if you want to get more of these opportunities and strategies to increase profits, then head over to our website. We'll put a link here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.